Well, hello folks, I'm LA Little and this is your daily NeoTA wrap, where we take a look at these markets and we do it from a neoclassical perspective. Each time we ask ourselves what happened today and what does it tell us about the coming ones. I do a show 4 times a week, every Monday through Thursday. I broadcast at 9, actually at 10 o'clock Eastern time or before. Archived on YouTube, it's under the channel LA Little. You can find me there. It's anytime, anywhere broadcast, on demand. You just pick it up. If you subscribe to the channel, then of course you get notified. It's actually easier. As far as these markets and what they're doing, it was a down day. It was a pretty tough day, actually. We had weakness coming into these markets, and something like 3 weeks ago, 2.5, 3 weeks ago, I talked about the fact that fast-moving currency and bonds, generally that's hard on equities. The effect, is a lag effect, and it's not always clear exactly when it's going to show up. But those fast moves are difficult because they create the situation where a lot of people get on the wrong side of trades, and they have to start doing something about it, and that becomes an issue. And in particular, the currencies and the bonds are much bigger than the stock market. So when those moves become large, then the ripples into the stock market are pretty hard. We had the Dow down over 100 today, 0.62. It was the least of the losers. S&P down 0.8, 16 points lower. It's still, holding that 192, 193 area. That's kind of a key area. We'll talk about that here in a minute when we get to the chart. A big loser one more time, Russell 1.53, 17 points, 1129. Index down almost 1%, a composite down over 1%. I started having some bond bounces again today, and then the rest of the commodities, same sort of thing, right? Just give it up, right? Dollar comes off today and actually finally does a reversal. So it does look like you're getting those things that we talked about even as recent as last night. The bond bounces, the dollar coming off some, and the equities pulling back on that. But there's no real damage yet. It's just that the damage could be on its way. Let's pop over here and look at the S&P 500. So remember last week, options expiration, big volume, we spike up, we hit the high, get over the high. The top is 2011.17. We actually closed back under it, but had volume. And last night we talked about that left some mixed signals. In other words, we could go up and test the top again, or simply go back down and test that low. Well, in this particular case, it never even tried to go back up, just simply headed straight down. Volume expands, and the key today was the test of the Fed bar. Fed bar was Wednesday last week. I'm going to highlight it. That was this bar. Test the underneath of that bar there, right? Gets underneath it, back over it, but had heavier volume. What does that tell you? It tells you it's going to come back and try it again. It's going to try to break it again. And what it's also doing at the same time here is it's doing a retest regen that's in that same area off that prior high. So this is a key area, and it's key because if you give it up here, right, all you have is this low, and that's not much of a low. You're looking back down at this low again, the high of that breakdown bar one more time, which is where we thought we were going to go the last time we started drifting down, and then of course another one of those V-shaped spikes. So that low to watch from my perspective is 1992.54. We touched into it 1991.01, had heavier volume. That's not a good thing. Now we may get some sort of a bounce here because of other reasons, but it does look to me like we're going to go test it again. And unless that volume dries up, those sellers disappear, it does look like it's going to be broken to the downside. So that is the S&P right now holding. Right now the damage is minimal, but the signs don't look particularly good. Now if I go look at the Dow, a little bit thinner, in terms of, it's 30 stocks, so you don't have quite the breadth here. The Dow actually has a swing point high. It's coming back into a retest regen. It doesn't have the huge volume expansion. That one actually looks like it will contribute to a bounce. So that's one reason. The other reason is the Russell. You know, the Russell, the weakest one, been the weakest one all year long, still negative, even more negative as of today. Had ABCDs down, right? Finished those off, and then did another one here. Finished it off today. So you finish off two ABCD structures to the downside. That's never good. Blows away the support zone, as you can see here. And what's more concerning on the Russell on a little bit longer time frame is now this is really starting to take the form of a bearish ABCD structure to the downside. And remember, we've talked about this one. It measured about 6 to 7%, would take you right down to these lows. So that is an ugly structure. These lows have held all year. They've been tested before, but they've held. If they start to break, it's going to be a bad situation. So you got one up here at the top, and then this one actually had already broken, I thought. I guess not on the weekly. So you actually have another one there, two more down beneath. Folks, when you get this many swing point lows lined up all within, you know, a few points of each other, and we're only talking, you know, percent and a half there at most, that's a dangerous situation if you start coming down, barreling down towards it. And this is starting to take that form. So that's something to watch as we go a little bit farther out. Going back to the daily though, finished off an ABCD structure. Volume does expand. The bar it was coming into 419, and the low's high is 378, and it's coming into at 334. So even though the volume is expanding on the way down, it's not as much as what it's coming into. And the bar it got underneath also had 302, just slightly more. So looks to me like you probably get the bounce here after the ABCD structure. But the key is going to be is where does the bounce take you and what does it do after it? If I look back over here, I would line it back up about like that. I suspect that's going to be a tough spot to get over. So you take this low high combination, that zone right there is probably going to be the tough spot to get over on a bounce, assuming we can get that kind of a bounce. That's the Russell, probably a bounce. Dow's still suggesting some sort of a bounce. NASDAQ, the S&P's volume expands as they go under the lows. And if we go look at the NDX was doing the same thing. There's the Fed bar there, gets underneath it, has more volume. Again, going to test it again. And folks, there's nothing up here. If you get under it, you got to come all the way back to the swing point high just to get something of interest. So, you know, it's not terrible yet. It can get worse. It does look like it's going to bounce first and then get worse. So that's the kind of the setup that's there. And if you look at the NASDAQ composite itself, it's deep into the bar, underneath the Fed bar, had expanded volume. This one is suggesting that's exactly what we're going to see, is we're going to see this market trade lower as we go. I want to flip over to the world markets. I want to just quickly review some of these. Anybody supplying anything to China is getting hammered. Here's Australia, and what we're talking about is resource countries. Here's Brazil, here's Toronto, all of them the same, all getting hammered. And if you go look at China, here's China, 8 shares, breaks out swing point lows. They're looking to give up everything since back here in July now. And if we look at the Hang Seng in Hong Kong, same sort of thing, breaks these swing point lows. These are starting to line up swing point lows on the weeklies too. Well, not Hong Kong, but some of the other ones are. It's not a good situation when you start giving up these kinds of gains and just giving it up without any kind of any buying. I mean, it's straight down here. Tonight, PMIs, flash PMIs around the world, starting with China tonight. So you're going to have them there, you're going to have them in Europe, you're going to have it back here, US, and then I think Japan tomorrow night. So all these economic numbers, and that's really the big event this week. There is a GDP number on Friday, a second revision in US, but these numbers are going to be kind of the make-break numbers, because the worries today really that got everything started was off Japan again, and that was that the two things. I didn't see any more news about it. I saw some early news this morning about the possibility of some loan defaults in one of the provinces, and it was a fairly large sum of money. We're talking about billions, defaults, potentially going default, and then we didn't see anything out of the government saying that they were going to ease more in China, and that also sort of worried folks. So China's still kind of the one that's struggling, and China's a big player. I mean, it's second largest economy in the globe. So when they, they used to say that, when the U.S. sneezed, the rest of the world got a cold. Well, if the U.S. and China, either one of them sneeze anymore, the rest of the world gets a cold. Okay, so that's the world markets, that's the general markets, and then if I quickly flip here, well, I'll go into these next, but I try to give a summary 10 minutes in. The summary here to me is you probably can expect some sort of a bounce. I don't expect it to carry that far now, and my thoughts on an up week are probably being put to test here. This is kind of a key area. Market needs to hold at this point and get a bounce and actually hold that bounce. If it doesn't, I think we come back down and we start breaking down some more. PMI numbers, those will be key tonight to either shore this market up or to add some fuel to the fire. Let's go over to the sectors now. And the reason I want to spend a little bit of time here is, a lot of these sectors had gone up and made new highs. Transport's been one of the strongest sectors for a good 2 years now. Got the big bump here on FedEx, big volume expansion, FedEx bar, and then what do? We just sell straight back down, do a retest regen off that high, and fell with volume. If I look at the SOXX, the SOX, what does it do? Swing point high, test it Friday, fells it today. If I look at the, here's another one, XLB. XLB goes over the highs yesterday or Friday, but had volume. So what does it do? Test them again today. Doesn't have volume, gets over them again, fells again. This thing's coming back down. XLE is in a world of hurt, has been, continues to be. This one breaking out lows again today. If I pull over the weekly on this one's starting to come down to break this swing point low on a weekly. That low, 92.61. We closed today at 92.41. At the end of the week, if we're down there, that turns this to bearish. It'd be the first major sector to go bearish again. And again, when you see these things start to flip, you get 2 or 3 of them, usually the rest of them follow. So that would be the first. Elsewhere, you're starting to see other failures. Here's the XLY. XLY had retested, regenerated twice, starts to give it up today. That low 67.69, you close 67.53, that's failed on the retest regen. And what I'm talking about is anytime you go over a swing point high, you look at the one that had the highest high, you measure the top to the bottom, you bring it across, as it comes back in and test it, that tells you whether the buyers are going to step up or not. It gives you an indication of whether this is going to be a range trade or a continuation trade, and that's what you're always trying to decide. Are they going to go this way, or is it going to continue this? Well, this answer tonight, it's going to go back down here and go sideways. Some sort of a range going to develop in here. So multiple sectors starting to break down. That also applies to the idea of these markets potentially getting a bounce, but only a bounce, because some damage is being done underneath right now. Now, there are still, and this is where the bounce comes in, there's still some strong sectors. XLF doing a retest regen. The XL, what was the other one? Oh, the IBB itself, the biotechs along with XLV. These are all still looking pretty strong, and they're fairly large weighting. And then the XLK itself hasn't given it up either, so that's still up in that range. So far there's enough to keep this thing going, but they got to step up, and they got to step up pretty soon. Going back to that idea, as we round out the show here, going back to that idea that when you get these fast moves in currencies and in bonds, usually that's bad on equities. And if you go and look at like the emerging markets here, you're starting to see some real damage. This is basically, China, Brazil, India, a number of markets, but they're all emerging, right? You've got an ABCD structure here to the downside now, and a fairly large one. And if I pull over the weekly is about to break swing point lows. You got two of them lined up. So you're breaking swing point lows here, you're breaking swing point lows here. That's multiple swing point breaks, multiple time frames. That's never a good thing. That's damaging. That's a problem. So that's the FXE. These emerging markets have a lot more to do with commodities, and that's why you're seeing this kind of damage done to them. If we look at the commodities themselves, here's the continuous commodity contract. That's about as ugly as it gets. Just bleeds lower and lower and lower. And if you look at gold and silver, they're doing the same thing. Here's gold, one day after another, just slower, lower, lower. Can't do anything about it. Silver totally blew out the bottom last week, right? Expands down. Still couldn't get back in that bar today. A tough situation. Here's the bond bounce we were talking about. But if we go back to the commodities, you know, one after another, they're either hanging at the lows or they're making new lows right across the board. And then there's the dollar. The dollar, you actually had to flip around. Yeah, that looks better. I didn't think we went down that much today when I was looking at it over there. This is a failure at the highs, but we weren't down to 1%. We were down slightly, 0.09. So just a slight pullback so far in the dollar. But that looks like that is going to lead to a pullback. It's going to give you more of a bounce in the bonds and probably help the equities a little bit as well. And I did see, you know, I told you about a week and a half ago that these currency moves were going to be a problem for earnings, although I suspect this earnings season is not going to hit them as hard. If it continues, though, you know, the first quarter earnings seasons will be really tough. But I saw a lot of press this morning about earnings in Market Watch and over on Bloomberg. And so, you know, yeah, it is a problem. And, you know, you heard it here first. It's going to be an issue, a headwind for earnings this season. All right, let's, I had a question emailed to me, so let's pop in there and take it first. If you're interested in participating in the show, you still can. It's fairly easy. You know, you just have to go into, if you're coming straight into YouTube, you won't see it there. Maybe I'll get it pressed in there. Let me see here, TATV. If you come in here, you know, the data's here, so it's fairly easy. Come to TA Today, just click on the NeoTA Today TV. You know, here's your methods of getting in touch with me. I'd be more than happy to answer your questions. I think it makes for a livelier show if I'm answering your questions instead of creating my own and answering them. So do feel free to participate. GDX. So the question here was, you know, I bought this at 23. Is it okay? Well, not really. And let's talk about this for a second. So, I mean, surely, and I don't do the Bollinger Bands and all that stuff, but you know, you can tell just looking at this. This is like stretching the bands. Let me pull up a different chart. So let me go get GDX here, put it on 3 months, and pull out my, what you call it here, and let's see, I think I actually have a Bollinger Band from somewhere. Here we go. I believe there's one in here. Yeah, there is. So if I pull on the Bollinger Bands, yeah, see how this thing is just stretching? And it hasn't even, you know, here it got outside, got little bounces on both of them, right? But now you're just stretching this thing to the downside, right? So there's nothing here to tell you it's a reversal. And if you do some of the other signals like, you know, oscillators, some of the various oscillators, I'm sure those are down at the bottom but probably haven't curled up yet because it hasn't gotten any kind of a bounce. There's just nothing there. So, you know, if you're looking at those indicators, they're not really going to give you anything. Question is where is the next support point? So you have to go to a longer term time frame. And if I come over here, I see a low. It's got 130 on it. We're in the first day here. We did 40. So 40 times 5 is 200 if you do that. 200 is going to be a lot more than 130. So they can certainly blow this thing away if this volume continues at this level. Then you go back over and you look and say, okay, is there anything that's coming into that might give it support? And so over here I've got a high at 2188 and I've got 244 on that one. So that number was 2188. And we're at 2218, and this one is at 2193. So there's a little sliver right here of some large volume that's going to give this thing some support. And I suspect if you're going to get a bounce, it's going to come right off of this area. You know, somewhere in here, and given how hard this is trading down, you may even get to the top of the low. So I'd give it a little wider bar. So if I'm in this at 23, I do not want to see it trade under 2140. All right, that's the high of the low. If it gets up underneath there, you can pretty much write it off. It's going to the bottom, and there's no volume on this thing at the bottom. In other words, it can blow it out. Now, the way this is set up in terms of the structure here is to your advantage in that you can probably get your money back out of this thing, or at least get most of it. And that is that you kind of have these humps that are taking place. And when you come down off of one of these humps, it's hard to keep going down. So I suspect you're going to get some sort of, you know, sideways to up type action over here as it hits this area, right, and tries to push back up. It's an escape point, though. It's not it's not something I'd want to stick around for. So if this thing does find the support here, you know, the next 20-30 cents, then you want to use that bounce to get back out of this, recoup some or all your money and forget about it. I would not stay in it. Now, I know that they can bounce and they can bounce hard, but here's your monthly. The monthly also, just look at how it's lined up. 22.21. I'm looking at the lows other than the lowest low. 21.93. 22, and now we're at 22.18. This 22 area, if it doesn't hold, there isn't much there to hold it, you know, and this could become a much larger problem for anybody that's in these shares. And what I'm saying is this is a very large ABCD structure if it kicks into place. And I know that's hard to believe, but you know, I've seen stranger things in my life, so don't discount it completely. If it starts to break down, you just got to get out of the way. So that's the gold, or actually the gold miners. I suspect the GDXJ looks just as bad or worse. Let me see what it looks like. This is the small caps. Yeah, they really started blowing it out today too. Let me see what the weekly looks like. The same sort of thing. They're a little bit stronger, but they're coming down and doing the same thing, and they got the same structure here. So, you know, it's a tough situation. Just don't give it much more room, because it's going to be it's not a good thing. All right, I think that's about it for tonight. We have, you know, markets certainly in turmoil at this point. And when I say in turmoil, what I'm saying is that, you know, they tried to break this down. Remember, if we go back to what we had before, and you know, it's easy to kind of forget all this, but we had this range up here before. And then we started drifting up under and stretching it, and then what do? What this market always does, right? Just straight back up like it's never going to stop again. That made a new high. So now you're kind of getting, and you know, it's a little early to see it, but you're kind of getting this sort of a triangle thing going on up here, right? Which is what a lot of folks look at as topping patterns. And you know, whether this is going to actually top out or not is a different question, but it certainly is developing kind of this broadening situation. Now, in the old classical TA, you know, when you get 5 of these, so in other words, when you get, I'll draw with this, when you get, you know, a high, a low, a higher high, a lower low, and then even a higher high following that, right? That's kind of a classic I'm about to give it all up thing, right? Because it's a broadening pattern. And what it says is the market's in turmoil, and right now it definitely is in turmoil. It doesn't know if it can go higher. It doesn't know if the valuations will support it. That's why it's in turmoil. It's really focused right now on central banks and on earnings. Earnings won't hit for another 3 weeks. So we're not really going to see any help there. So it has to be economics and central banks in the meantime. Economics we get tonight. If those look okay, you're going to see this thing try to spike and you get that bounce. But I don't think it's going to hold that well because of just the structure that we talked about earlier in terms of the technical. It's not huge damage yet. Yeah, it can go back up and test these highs again, but we definitely have a little damage starting to take place, especially underneath in the sectors. Okay, that's it for tonight. Thanks for joining me. Have yourself a great one. Email those questions. Email them in or text them. I'll take them and I'll try to answer your questions rather than just mine. Have yourself a great night. I'll see you next time. Good night, folks.